how to trade using trend lines. So there's actually two ways that you could trade trends. You can either trade with the trends or you look for trend breakouts. Let's start off with trading with the trend, which, as I said earlier, if you're in a buyer's market, you're looking for buy trades. If you're in a seller's market, you're looking for sell trades. But more specifically, we're going to trade with the trend following the trend line bounce strategy. Here we have an uptrend marked by these 2 points. So again, you need at least 2 to 3 points to mark up a valid trend line. In efforts to use this trend line bounce strategy, we need price to come back and retest our ascending trend line as support. So as price fluctuates, price comes down, taps into our ascending trend line where we can enter for a buy. Our stop loss is going to be beyond this level of support, setting our take profit targets at either of these levels of prior resistance. As the trade plays out, this would have been a profitable trade for almost 600 pips. Here we have a downtrend marked by this descending trend line, starting from this point and connecting these points here, here, and here, which, as we stated earlier, your descending trend line can serve as a level of resistance. So at this point, we are waiting for price to retest our trend line once again. As you can see, we've now made contact, so we can enter for a sell position, setting our stop loss here at this point of resistance, and our take profit target set at this level of support. As the trade plays out, price went beyond our take profit target, allowing us to capitalize almost 300 pips from our point of entry. So to clarify, what we are showing you here is the trend line bounce strategy. You set up your trend lines and you wait for price to tap into your trend line zone. Once price hits that zone, you enter for the buy or sell depending on the trend that you're following, and you execute the trade. It's a great strategy adopted by a lot of intraday traders and scalpers, and it's one that I've incorporated many times throughout my trading career, including a position that we had taken just yesterday. Here's a trade that we took yesterday morning. As you can see, we have our ascending trend line. We waited for price to tap into our trend line. Once it did, we took a couple of positions. As price progressed, we waited for price to tap into our prior resistance level, closing the trade in profit for about 130 pips, which netted us a profit of over 13,000. Now, I will say that this type of approach using the trend line bounce strategy does open yourself to a little bit more risk. Just because price hits your trend line doesn't mean it's going to respect it and continue in its original trend trajectory. Case in point, using this downtrend example, here we have price coming back to our trend line once again. So based off the principles that we just went over on the trend line bounce strategy, most traders would assume, okay, well, let's enter for another sell. You set your stop loss and your take profit levels, only to realize price is now breaking all the way through, resulting in a loss. Breakouts are an indication of a potential trend reversal, which is something we're going to explain more in detail in a moment on how to trade trend breakouts. But before we get into that, let's talk about how we can avoid these scenarios from happening, or I should say not avoid, but in a sense, limit these scenarios to improve the overall probability of the trades that you take. And the best way to do this is by identifying confluences when you are waiting for price to reach your trend lines. If you enjoyed today's clip, make sure to like and subscribe. And if you want to watch the full masterclass, you can click on this video or the link down below.